to walk you through several quick studies that are all related, and these are straight out of our textbook. Excuse me. We're looking first at quick study 1-14, where we have to take the information that's given here and create an income statement. In quick study 1-15, we use the same information and what we calculated in our income statement and create a statement of retained earnings. And then finally, in quick study 1-16, we do a balance sheet. So let's start off with this income statement. You see in front of us this information that I clipped straight out of the textbook. We start with cash, we end up with utilities expense. What I'd like us to do first is classify these accounts. Which financial statement will we find them on? So let me get this out of the way and show it to you in Excel. So once again, the same dollar amounts in the accounts, utilities. So cash is a balance sheet account. It is an asset, so we'll classify it as that. Accounts receivable, once again, another balance sheet account. Accounts receivable, remember, that is where our customers owe us money. Supplies is another asset. Assets are found on the balance sheet. Equipment, same thing. Now the next one here is accounts payable. Remember, accounts payable is last name, means that we owe somebody. We have to pay someone. So that is a liability. If we have an obligation, it is a liability. We come to common stock. Common stock is a balance sheet equity account. And do note that when you see this common stock, realize that we are talking about a corporation. So equity balance sheet account. Retained earnings. And notice that we have retained earnings at the beginning of the month. We are here at the end of the month. So this is our beginning balance in the retained earnings account. Retained earnings is going to be found on the balance sheet in the equity section. We're also going to find it along with dividends in the statement of retained earnings. So keep that in mind. So dividends, statement of retained earnings. Service revenue, that's what we create during the month of December. Those are services that we have done for our customers, so that is going to be on the income statement. Wages, we got an expense. We have to pay our employees. Rent expense, once again, the landlord wants its money. Utilities expense, if it's spelled right, is another income statement account. So with that in mind, let's fix this. There we go. With that in mind, let's create an income statement. So with income statements, we always begin with revenue, with sales. So we have service revenue that is coming into the business. Now, one thing I'm going to do is show you this. We have service revenue of $16,000. From that, we're going to subtract our expenses. And I'm just going to label these while I'm here. As operating expenses. So we have our wages expense, and we have our rent expense, and we have our utilities expense. Now, wages expense was $8,000. Rent expense, the $15,000, and finally utilities, $700. And we will total those up. And I'll total them up right here. One thing I want to do is draw a line underneath that one. And then finally, this is our net income. Give it a single top and a double bottom. So it's going to be equal to that minus that amount right there. Oh, made a nice mistake. Rent expense, it's not $15,000, it is $1,500. So let's fix that right quick. Whew, the beauty of Excel. All right, so we ended up with net income of $5,800. Let's make sure that the reader of this knows what we're dealing with. So I'm going back to this 16,000 and I'm going to say this is in dollars. And I'm going to finish this up the same way. We have $5,800 of net income. All right, that is part one. The next section will be dealing with the statement of retained earnings.